everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, July 16th. Basically a ho-hum day yesterday. We had summer trading at its best on Monday. Dow Jones up 19, Nasdaq up 7, S&P up 2, Russell up 6, continues to be on fire. But the markets have been very, very quiet yesterday. Really not much going on. Still grinding higher, though. There's nothing you can say about that, that's for sure. Markets continue to move higher and edge higher after the flip-flop statement from Ben Bernanke. However, Ben Bernanke testifies on Congress on Thursday. Don't be surprised if he reverts back to what he's talking about, especially today. Today's number is going to be big as a CPI number. And if it's hot, if it comes in hot, he probably will change his stance again. I personally can't see continually to be flooding the market with this type of liquidity if all of a sudden the economy is really starting to be overinflated and get really hot here, especially if you come in with a CPI number that's hotter than expected. That's something that I think he's going to have to digest. So, the reason why he had flip-flopped, who knows? But totally crazy the way this market has been moving along. But again, that's not what we're here to figure out. We want to let price tell us what to do, and we have to follow what the trend is for the day. Very important. Okay, I have a few little charts. Very quiet session. The Forex markets have been extremely quiet as well. And that's something that is really interesting. And usually what happens when you go into this quiet period, that's when energy starts to build here in a lot of these major currency pairs, as well as the markets are concerned. So I'm watching closely what the FX markets are going to be doing, and we can get some sort of a breakout or breakdown at any given day, especially when it's quiet. Remember, when the markets are quiet like this, and you have a one-way market again, and you have a summer when you have a lot of market participants really out on vacation, the moves can be extreme. So you be ready for this, because I think we're going to get some sort of a decent-sized move in the next coming weeks, and I'm going to be prepared for it as well, to be nimble, stay nimble, and just really react to what the move is going to be. Okay, so we have our NYMO, right? I show you this every day. We are exactly in overbought. We have been overbought, and we can continue to stay overbought for quite some time. Not a sell signal, but I'd like to see a big pop up, get into this Bollinger Band, and then fail, and that would give us a little bit of a sell signal here for equities. Okay, to show you the tick. Tick is above zero, has stayed above zero, so this is good. This is quite bullish. Once you break below zero and you stay negative 100, 200, 300, now this is end of day data, okay? This isn't the intraday, but you stay below that, that's when you have a problem for the bulls, at least anyway. That tick can't even get above 100, above zero, but this is above zero. It's been staying above zero. So right now, the tick is okay, looking pretty good. Let's take a look at the dollar, and you should be looking at the dollar every day, guys. The dollar held at 50 and 20. Okay, we're below the 8, but we're above the 20, 50, and the 20 and the 200. So right now, this is what I'm expecting. I would like to see this push a little bit lower. That would really test a gold push up, and as well as crude oil and any commodities and precious metals, and that would actually give us a test of probably the highs, or take out the highs in the equity markets, and then from there we reevaluate it. So I would like to see this come in a little bit more, get one push up, get everybody in the bandwagon long, and that's what happens with a lot of the retail crowd that doesn't know how to manage or to dissect and do some proper technical analysis here. They usually come in on the top. So this is what I'm looking for here. Okay, this is the herd mentality. But then we'll see. We'll see where it goes. Now, it doesn't have to happen. It could actually start to hold and base right up in this area and then really break high. But watch what the dollar does. Very important. Now, speaking of precious metals, let's take a look at gold. Gold, we had a little bit of an inside day. Really didn't do much yesterday. But here is where I would like to see, right up in this area. 1350-400 would be an ideal short. This would be a really good objective short, at least to start with a short. Now, you might get stopped out, but this is what I'm looking for here in the coming days and weeks. 1350-1400 is what I'm looking to short gold. Take a look at WTI, crude oil. And as you can see here, we had a beautiful blast up here for the last 2 weeks. And oil really, again, up higher. Again, if you can see this area, but we're extremely overbought here, as you can see. So here's the bullish percent NER right up in here. So we're just kind of chugging along higher, which is nice. But I want to see gold come back into at least 98 to 100 in this area, make a higher low from this low, and then really start to take off again. We don't know, but I wouldn't be buying crude oil up at these areas, way overextended. So let's see if we can get a retracement back down to at least a 20, maybe even nibble in a little bit long here. But I do think crude oil can actually get to 108 and 1010, at least for now in the short term. Okay, now let's go right into the charts. And as you can see here, SPY, we have the Spiders ETF, the proxy for the S&P, and we are in this upward channel here. And again, look at what's going on here. Small little dojis. Yes, we are going higher, but what's happening is a lot of stocks really aren't moving. If they just gap up, they gap up and they stay up, and then they really consolidate pretty much most of the day. So the S&P is moving overnight, and what happens is we get this gap up in the morning, and then we just consolidate, and then we have one little move in the end of the day. So really not much. You have to catch some volatility, some news, a news-driven downgrade or an upgrade, and even then that's quite difficult sometimes when in the pre-market everything starts to move already. And then you only have 6.5 hours a day. So that's why use caution. Don't chase. But if you have something like this to move, I like to see candles. I like to see movement in the body of the candles, which we really haven't had here since this move happened 14 days ago. Okay, 14 trading days. So this is something that's a concern to me, and that's why I don't like to chase. Now, if we ever get a back test back into here or to the 50, and then we start to move higher, then I'd have no problem buying the market. But I wouldn't want to be looking to hold anything here at these levels. Okay, same thing with the diamonds, as you can see here, guys, just kind of drifting higher. Okay, in no man's land, we overbought all our indicators on very light volume. Transports really haven't been leading. It's been the Russell. Russell's been leading. Tech has been leading as well, a different sector, and also the banks have been doing quite well. So, and the consumer discretionary, which is what you want to see, that's also doing well. But as you can see here, we're still below this uptrend line now. Transports can actually take off and really start to lead here, but right now it has not been leading. So it's something that is a little bit of a concern to me. If you have the Russell leading, that's fine. Russell has been having a little bit of movement. Excuse me, but again, you're up 12, 13, 14 days in a row. It's just, to me, the calculation of risk is not there. You have a better downside movement than really to the upside. Now, Russell could continue to go. But you want to weigh the risk, and you want to basically say to yourself, well, do I want to buy it here, or would I rather buy it on a pullback? And if it doesn't pull back, you have to let it go, because you don't want to be buying into here, and the next day you're looking the morning, and you're down 6-7 handles in the S&P. Well, guess what? The first index that's going to go is where most of the people are flooded into the Russell. So that's something that you want to keep an eye on. Goldman had a nice big gap up, and then all of a sudden had a nice little doji. So let's see what happens with Goldman, but it probably at best should be testing the 166 in Goldman Sachs. And XLF doing quite well, but again, if you look at it, we're hugging this upper end of the Bollinger Band, and we actually broke out of the highs in the XLF. So a good pullback in this market is healthy, but we just haven't had any of these pullbacks. We were up, if you could see here, back up in January. We ran all of January, all of February, and at the end of February we had 2 down days. We ran all the way back up into mid-March, sideways consolidation into April. We had a little bit of a pop. We sold off for 3 days, and then we rallied all the way back up again. This is not healthy. This is all accommodation of the Fed. That's all it is, guys. If you're looking for a healthy market, you pull back, up, pull back, higher, low, pull back, up, higher, low, pull back, up, higher, low, and these flag formation, and that's what's healthy. That's really what you want to look for, not a straight up movement on low volume, and then 3 days takes out a week or a month's worth of gains. That's something that you don't want to see. That's what scares me a lot in this market. Okay, Apple here still hugging above the 50, holding nice here. So it is consolidating here. So the move could really be either way. I mean, it really could be. We got to really get above 435, hold, and then really we could take a beeline to the 470. Other than that, again, use caution here, okay, because we are at resistance. If we fail here, you got to at least test the 400 or the 385 in Apple. Lastly is the Qs. Qs doing quite well. Took out the highs, all-time highs, so Qs are really on fire. Watch the big cap tech. big cap tech's really been doing well. Intel, Clack, Cisco, Microsoft, all of these guys have really been doing quite well. And if you're looking for strength, I think that's the sector that you want to be in. I wouldn't accumulate now, but I'd be looking for any pullbacks, any weakness into the market. I would accumulate into those names that I mentioned. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.